month of March gets underway, we're seeing positive territory for the major equity averages as well as the global bourses. In midday trade, the Dow, Nasdaq, and S&P 500 are all up by 1%. Joining me now is Peter Costa of Empire Executions. Peter, we're seeing a strong start to the month of March, and we're here on a Super Tuesday. Now, we do have to keep in mind that we've been seeing plenty of volatility. So what do you make of today's action?
Well, today, it's actually what I'm seeing is a little bit of a divergence between what the oil market's been doing and what the U.S. equity market's doing. The oil's down a little bit, and the U.S. equities are up. So this is the first time, in a while that we've had that little bit of a divergence. So I think that's positive. This is mostly positive data. I think people are a little more optimistic, and tomorrow they may not be, but today they are.
Well, it's been heavy on global economic data. We got a mixed picture out from the Eurozone, the UK, as well as China. But here in the US, we saw the ISM manufacturing, construction spending, as well as auto sales for the last month improve. But we did get that weaker reading on the PMI figures. But heading into the end of the week, we have that big jobs report. So what are you looking for?
Well, the jobs report I don't think will surprise. But like every jobs report we've had for the last 9 months, you worry that the Fed's going to take it as being very robust. Well, it's not really that robust. So I think that's one of the concerns is, how the Fed perceives it and what their reaction will be to it. So, if we do have a better number, I'm not expecting it, but if we do have a better number, that would be probably a negative because then the Fed's going to say, well, we're starting to accelerate and maybe we need to, ramp up rates again. And we're going to go through that whole song and dance for the next month and a half. So, we'll have to wait and see. I think it'll probably be right in line. I'm not expecting any surprises. If there's no surprises, then the market will react it'll be a muted reaction.
And Peter, when it comes to global economic data, it's all about what it means for economic rates. So we'll also be keeping an eye on inflation levels around the globe. But given what we're seeing so far, what's your take? And I also want to get your take on China, especially since they cut the reserve requirement ratio.
Well, the first thing, I think that, inflation worldwide is not going to be an issue. I mean, if anything, you've got Japan that could... in some measures could almost be in a deflationary state. So I don't think inflation is going to be a real issue overseas. Where U.S., it may at some point be a problem or at least something to be aware of. I don't think you have to worry about that overseas. And as far as China, trying to ramp up their economy, they've tried it before. They're still going at 5.5%, GDP, year to year. That's still pretty strong. It may not be strong for the Chinese, but we'd love to have that in the United States.
And last but not least, Peter, are you bullish on anything, bearish on some components, oil, equities? Where do you stand?
Well, you know what? Right now, I got to tell you that I'm starting to really like the financials. I think that they've had a very, very rough road. I think that there's still some solid companies out there that that are relatively cheap, historically, and that's what I like. I like historically cheap, stocks that have a lot of room and momentum. Not so much momentum. I'm not worried about momentum, but I'm worried about what I look for is that value and looking for stocks that their P's are more in line, with their traditional P's, and the financials are right in there, right in that wheelhouse. And oil. You know what? I don't think you're going to see oil hit $26 a barrel anytime soon. Maybe we'll top out around 40, but the oil companies, they have a much different approach to investing in their business models. Their business models are 3, 5, and 10 years down the road. So I like the oil companies. I think for a long-term investment, I think they're very solid.
Okay, Peter. Well, we'll keep an eye on oil prices as we head into the close today. So thanks so much for your insight.
Thank you for having me.